Bismillahirrahmanirrahim. Assalamu alaikum dear students. Today we are going to solve problem 10-13 of Managerial Finance chapter number 10 Capital Budgeting Techniques of Lawrence J. Gitman. तो सॉल्व करते हैं जी प्रॉब्लम 10-13 को. फर्स्ट आई विल रीड फ्रॉम द बुक, देन वी विल सॉल्व इट. इफ यू आर न्यू ऑन चैनल, काइंडली सब्सक्राइब इट. A project costs $2.5 million upfront cost and will generate cash flow in perpetuity of $240,000. The firm cost of capital is 9%. The first requirement is to calculate the project NPV. First, you will have to calculate the project NPV requirement in A section. As you know, the formula for the NPV is equal to present value of cash inflows minus initial cash outlay या initial investment. So first we have to calculate the present value of cash inflows. How we can calculate the present value of cash inflows? Here you have recognized that the case is for perpetuity. How we can know about the perpetuity? Here, and will generate cash flow in the perpetuity of 2,40,000. The formula for calculating the present value of cash inflow in case of perpetuity is equal to R divided by interest rate. In other terms, PMT divided by rate. Rate or PMT show the annual cash inflows. Here is the annual cash inflow in the question is $240,000 divided by interest rate. Interest rate is equal to 0.09. You have to divide 240,000 divided by 0.09. The answer you will get 6.667. Now we have to calculate NPV. NPV is equal to, as we have written the formula before, present value of cash inflows minus initial cash outlay. The present value is here 26,100,000 minus 2.5 million is initial cash outflow. The NPV so it is positive or greater than 0, so it will be acceptable. This is requirement number A, section A. In section B, we will calculate calculate the annual EVA in a typical year. A new topic introduced in this chapter is EVA. First, I will tell you about a short explanation of EVA, economic value added. Actually, its economic value added is calculated on year by year basis. Year by year basis. Number 2, economic value added shows pure economic profit. In terms of pure economic profit, Why we are going to calculate here economic value added, whether we have already calculated the NPV? The difference between NPV and EVS, NPV is calculated on the entire period of life. NPV calculated for the entire period, but the economic value added shows you the economic profit year by year basis. Then you can make decision very easily and quickly. So how we can solve the economic value added? Economic value added formula is equal to, the formula for economic value added is equal to annual cash inflows minus amount invested multiply by cost of capital. Actually, it is called capital charge. What it is called capital charge. The annual benefit which are going to be invest, what is the cost of that amount? Actually, it shows the cost of capital. The capital charge. The annual benefit will be compared with the annual cost. Then we can show how we can make decisions on the entirely year by year basis. Although the NPV shows the profit or acceptable, rejectable for the entire period of life of the project. The annual cash flow is 2,40,000 minus amount invested 2.5 million multiply by cost of capital 9%, 0.09. 2,40,000 minus, you have to calculate 22.5 million, 0.09. 225,000. 2,25,000. The economic value added $15,000. What is meaning of the 15,000? It means the project is worth 15,000 on year by year basis. Mean the annual benefit will be 15,000 of this project. It shows actually this amount. Now we are going to solve C requirement. What is the actually meaning of the C? Calculate the overall project of EVA. What is meaning of the overall EVA? Overall EVA is equal to, it shows the total benefit of the entire project. In simple EVA, we have calculated the economic value added on year by year basis, but in this period, overall EVA, we are going to solve the benefit entire period of the life of the project. What is the formula for overall EVA? Annual EVA divided by rate. Annual EVA is 15,000. Rate is equal to 0.09. The answer is, and same is the result of the NPV. NPV also shows this amount. So in this type, NPV and economic value added showing the exactly same answer. NPV and economic value added actually showing exactly The same answer. Hope you will get the point. What is the EVO and what EVA and overall EVA? What is meaning of EVA? What is difference between EVA and NPV? So hope you guys will get it. And thank you for watching. Allah Hafiz.